Hey everybody, Eric Isham, founder and CEO of OmniCommander, and today I've got Justin Fisher over at Risk Scout with me.
Hey Eric, how are you?
I'm doing well, buddy. And Justin and I were talking, and he had an idea that we should probably do a quick little podcast, video cast, vlog, whatever you want to call it. We were down at AFT, was that last week, the week before last, recently, down in Tampa, and sitting around a bar at night, drinking some beers and kind of talking about the state of fintech and what we're seeing on the banks and credit unions. And he had an idea we should get together and chat for a little bit. So this is it.
Yeah, man. It was great seeing you in person. I don't know how long we've been working together, 15 years or so. Let's not even talk about that because that'll probably age us both.
Yeah.
But it was good to see you, man, and good to hear about all the good stuff at OmniCommander. Here at Riskow, we've seen some pretty interesting stuff the last few years. I was literally doing a presentation deck for a big show in the next month, and when I started thinking about like all the things that have happened, right? Kind of like rewind past SVB bank concern this year to layoffs, to inflation, right? To the war in Ukraine, back to pandemic days, back to like PPP. Like there's been crazy things, like, massive sort of peaks and valleys that have happened, right? In the space in the last few years. And, what's interesting to me is, I'm carrying a community bank flag, the Main Street bank flag, and credit union flag for, down to my, down to my heart here. And, those institutions are not necessarily the ones that are in these over leveraged positions, but they're also experiencing the similar sort of, rising tide rises all boats or drains all boats, right? And in the sense that it's just tough to grow these days, right? It's tough to acquire a branch. It's tough to go and get new deposits at a reasonable cost, right? It's tough to just keep doing the things you've been doing. Open up that next branch, open up that, that sort of next, basic lending initiative. And so, one of the things we've been seeing is just, how do I grow? Like, I recently had a CEO, I'll tell you this quick story. I think we talked about the other days. He flew in, we took me to dinner, and he's like, a $300 million bank. And he's like, I either sell the bank, we've had decent growth, but, single to low double digit growth. He's like, but I either sell the bank or I take a big swing, take a home run shot. Right. And, he had a buddy or a family member or friend that had a bank that was 500 million who had sponsored Fintech and, was now seeing 60-70% of his revenue coming from a Fintech company that sits on top of his bank. Right. And, it's amazing. It's like crazy when you think about, what that could be. But for him, his perspective of it was, that's just an app, right? That's just technology. I can turn that on and just be on top of my bank. And unfortunately, it's a little more involved in that, but it's something that we're seeing a lot of. ABA conference last year, there was a lot of push from the ABA around innovation, quote innovation, but the innovation tracks were about how to work with fintechs, how to be a sponsored bank or credit union, right? And so I think what's interesting about it, man, is I'm seeing a lot more of that stuff. Is really simple statement is I need to grow. I need to find new deposits that are low cost, and I can't just go sort of grow it out of my existing backyard here. I have to go, and think about doing things in more digital ways and more ways to reach out to other regions, to start banking maybe some new customers I never thought about banking,
Right.
and move on with that. I don't know. Are you seeing some of that too?
Yeah. It's interesting you said that, because one of the things I talk a lot about, especially when with other companies, about how to grow or how to have really fast growth. And it's a very simple step that I think a lot of people miss. And this might even be some of the banks and credit unions. And that is, you've got to define your target audience. You've got to identify the demographic that you're going to go after, right? So if you're a closed set credit union and it's, let's say, teachers only, they kind of make it easy for you to say like, hey, these are the group of members that I want to go after. But, if you're a state charter or if you're a community bank, then you might find yourself kind of wandering around to different paths and not having that clear defined target, right? So you really got to, once you've identified that target audience, then you can tailor your message to be very specific around that. OmniCommander, it's very easy for us, right? We've been laser focused on banks and credit unions, or really credit unions for the first 6 years of our existence. We have some banking clients and we can service them as well. But because we were so clearly defined our market, we've talked about that before too. Could I go do website design for the car lot down the street? Sure. Can I do marketing for the restaurant down the street? Absolutely. Can I do cybersecurity for the healthcare company across the street? Absolutely. But you have to start tailoring your message differently for each of those to go and attract car lots or healthcare companies or restaurants. And I think it's the same thing when you look at community financial institutions. You talk about banks or credit unions. They've really got to identify that target audience, and then they can pinpoint what the messaging is. It sounds like your friend, recognized he had 70% of his revenue coming from this piece. Like, okay, well, how do you amplify that? And do you have a specific target audience in mind?
Yeah, and what works for his buddy's bank isn't going to necessarily work for his bank, even in the same region. I think you could comment on a lot of this. We have a few institutions in the cannabis and hemp space, and there's kind of a case study of one institution versus another, in the sense that it's not always a field of dreams, right? Just because you open a program doesn't mean it's gonna grow. And sometimes they do get very spread out around their target audience, right? And really what they're wanting is the highest amount of deposits, but sometimes they're all the way out selling to CBD stores versus large commercial grade businesses who are doing greenhouse lighting, right? And so, one of the things we saw is that as they started to create an affinity marketing program, sort of separate website, maybe even dedicate, a resource out of business development who understands how to open hemp and cannabis accounts. We have one institution who went as far as creating a booth, and they go out to the agricultural, conventions, and they show that they're a sponsor. By the way, they were the only bank out of 200 booths there, the only banking services. So they had it kind of cornered from checking accounts to bank to loans. By the way, that was a $400 million institution that did $40 million of new deposits with no interest bearing costs on them in about 10 months on our system.
That's fast.
But I've got some others that, turn a system on and then kind of wait. And so, I'm really curious, and this is kind of why we partnered with OMNICOMMANDER, because, we're good at the compliance side and the operational side and making sure we can help open these new markets, create a channel for people to apply. Mm-hmm. That doesn't mean people are just going to find that link. So, right, what do you recommend for a bank who says, or credit union that says, hey, I'm going to go do my own fintech thing, right? Or I'm going to turn on, it could even just be a new lending program or a new digital offering or hemp or cannabis. It could be any of these things, but a new initiative. Yet they've got sort of a single marketing person who knows how to market a checking account, right? Maybe even, to your point, maybe even more like a SEG, where they've been so focused on what they've been doing. This is something new. How does OMNICOMMANDER, how do you think about it in terms of helping them to sort of open up that horizon,
Yeah. So, getting back into the messaging. So once you've identified who that target market is, I think it's important in that messaging that you need to really develop a unique value proposition, right? So for your bank that was at that conference, hell, they were the only bank there, right? So they would have a very unique proposition as opposed to everybody else that was exhibiting there. But, if we're talking about somebody trying to go out there and market into those channels, there's multiple different marketing channels that any financial institution should be using, right? And it should be centered around what the unique audience is or what that target audience is. So, if you know that your target audience is spending a lot of time on Instagram, then I would spend time there as well. If it's if it's a different generation, maybe it's Facebook, maybe it's TikTok. I think that it's important, once you understand your target audience, to get messaging out there, to use multiple different mediums, right? So it's not just always digital. It can be traditional, it can be billboard, it can be radio, it can be TV, it can be paid, organic type of media. There's so many different channels out there, and some of them are really effective to move certain types of products, and some of them absolutely not, right? So, I think it's important to set those types of parameters up front before you just start trying, because you can go out and spend a whole bunch of money on paid media and get nothing for it if you don't have it focused correctly. And another big miss that I see with a lot of the folks are, they're not really setting what their goals are. So they don't ever know if they hit success or they miss it by a large margin. One of the things that we talk about internally here at OmniCommander all the time is an X to Y by Z. And what I mean by that, Justin, is X is where they're at now. So let's say it's $100 million credit union, right? And I say, hey, strategically, what is your goal? And they say, well, we want to grow to be $110 million credit union. Great. So I've already got two of those filled out. X is 100 million. They want to grow to 110 million. That's the Y. And then the next question is when, right? We want to do that by this time next year. And I'll say, okay, then that's the Z. So they're at 100 million. They want to go to 110 million, and they want to do that in 12 months. So I've got all three of my blanks filled in, and then we can start to work around those parameters. Now you got to be careful because somebody might say, we're $100 million and we want to go to $300 million. We're going to do that by next month. And then we say, okay, you don't
Sign me up for that one. I'll take.
yeah, you need a magician or something, right? So you also have to make sure that, the goals are aligned between your various different partners and that it's things that you can move the needle on. But getting those goals, I think, is very, very important. So when you're going out into those new channels, and it doesn't have to be big goals either for something that's net new. If you're trying to gain 5 new customers with a particular program, at the end of the month, then you know where that is, and you can define, do we make it? Is it successful or is it not?
Yeah, no, that's a good point. I would switch gears on you a little bit. We were having a great conversation, at AFT about sort of the digital expectations from customers. So, my perspective has been, and I think this is kind of shared across, the experts of the industry out there, is as the pandemic rolled through, it kind of drug more institutions to have to come up with tools. And when I say tools, Box.com, right? Dropbox and, Zoom, basically, courtrooms are using Zoom now for expert witnesses, right? Not even sure that'll last, but we had to look at different ways to kind of do things digitally. There's been a huge, sort of resurgence or growth in the sort of online banking world and the online account opening world. Now, look, I think since the pandemic is kind of relieved, obviously, I think there are people excited to come back into branch, but I don't think that's the majority of the population. I think the challenge that I hear from my institutions is that now that people know that I can send them a document that they can sign, they don't want to come in the branch to do it. In fact, large treasury customers, large business customers don't want to come in and do it. So I've got to find more ways to do that. And so, kind of in our world, we did something a compliance vendor doesn't normally do. We built an onboarding application, and we built, secure collection things. So like if there's $100,000 wire that a hemp farmer does in North Carolina or a, MSB does in Texas, and it looks weird, we can go and collect stuff directly from them instead of waiting for them to come to the branch or to create an analog way to communicate with them, right? And that's obviously got benefits besides instant communication. It's examiner support and everything else. But I guess I'm curious to hear from you. I think you guys at OMNICOMMANDER just released something like this, but what are the digital expectations from customers these days? When sort of how are the institutions responding to that?
Yeah. So when I think about digital expectations from customers today, specifically today, there's basically 5 big ones that I think of. Convenience being the top one, right? You just said it. People don't want to come in anymore. Customers expect digital services and experiences to be fast, easy, and basically seamless, right? So that convenience thing is right at the top of digital expectations. And, we just launched a brand new solution. We call it Branch Commander, and it is a full digital branch. It's everything that's user facing. So what we've done websites for a long time. We got nearly 600 clients that we built websites for. And what we realized is we built a lot of products and services in the websites. And when you have all of them on, it really does become a digital branch. And convenience is baked into all of that as a key or a baseline expectation for users that are visiting it. I'll tell you the biggest convenience that we offer with Branch Commander is our integrated chat solution. So we've got these are commandos. These are people here in the office or our various different offices that when a member or a customer goes to that digital branch and they've got a question, we're responding to them real time. Right there, right? This isn't bots. These aren't automated scripts. This isn't, offshoring to a third-party call center. This is actual OmniCommander employees that are answering questions for people that are going to those banks and credit unions' websites. And I liken it to the difference of walking into an empty store and just kind of looking around at stuff and walking into a store where somebody says, hey, how may I help you? Is there something I can help you find, right? And it's been a game changer for our clients that are utilizing that with regards to increase in loans, increase in new members, and just the satisfaction level of that experience. So convenience is right at the top of the expectation for digital with consumers today. The next one's really personalization, right? We didn't really have, when you think about digital or fintech, you go back 10 years, you don't really have to go that far back, but there was little to no personalization ever. You know, one of the things we were talking about were those skins you guys did way back when, and kind of the thought process around, you know, the personalization and bringing that to banking. And, you know, here we are, 2023, and most of what we see out there, it's kind of built as a one size fits all. And I think that the personalization for each financial institution is huge, right? That it doesn't look like everybody else. That there's we've identified what our key demographic is. Now we need to build that user experience specific for our demographic that we're wanting to go after. So when it comes to those digital expectations, right next to convenience for me is personalization. I think it's very, very important.
Yeah, I mean, look at USAA, right? They built a huge, very defendable brand, right? Based on that kind of point that you're making, not just an affinity relationship as veterans, right? But as, you know, a whole brand around that. And as, you know, I think you talk to any average person, they aspire to get into USAA, right?
Yeah.
And I think, you know, most credit unions and banks want that same sort of following, but to your point, it's hard if your, you know, digital banking vendor is built in the 90s, early 2000s, has the same look as the guy next door, because it's all kind of commoditized, right? We see the same challenge in the financial crime space and sort of the back end of the bank, the operations and financial crime. These systems were built 20 years ago. So they never envisioned having an alert that said this guy's sending $100,000 wire, and then like needing to get an answer from someone who's actually in the system, like actually having the businesses respond in the system. So in that way too, we kind of have a chatbot like messaging thing that collects and talks to the customer. Well, all of a sudden our institutions are like, hey, well, can I send a DocuSign for their debit card? Can I do a video chat with them so I can talk to them about this? I mean, it starts to open up all these other possibilities that are actually not difficult, you know, in kind of our kind of code set, because we're not bound to all that legacy stuff that the Corps and the others were doing, right? So absolutely, I totally agree. It sounds great on that virtual branch. I've seen some really amazing technology like that, and I've seen what you guys are doing there, and I think that's gonna be a game changer for a lot of institutions. But look, I mean, let's hide this for a second. I had my mom was asking me for a high interest rate account, and you know, I have to say I haven't been up on who has the highest interest rate or who's the easiest process, but I happen to find PNC. Personally, I would rather work with more Main Street banks, and I personally do, but I found it really hard to go out and find a Main Street bank who was in the advertising, even 3 pages deep, because I tried hard, Eric. I tried hard to find somebody, and then all of it was open in a branch. So I did the PNC process, took 5 minutes to open her account. She has a 4% savings account, interest rate APR account with no fees, no minimums. And, you know, she's good to go, right?
That's great.
Like, I mean, it was 5 minutes. So, you know, I don't quite understand why we don't have institutions further along. I mean, consumer online account opening's been out there for a while. I know business is tougher, but these are the things that you probably have an offering. The people that are going to watch this video, we have an offering, but how are you SEO optimizing it? How are you getting that message out? But you're probably battling Chime, Robinhood. I don't know if you saw the SVB deposit movement. You know, obviously 50% of it or more went to Chase, but do you know who the next big benefactor was?
I did, and it was a name I didn't recognize, or what? It's not as
Mercury.
That's
Mercury.
right.
And
Yep.
Mercury is a challenger bank built on Evolve. So Evolve is a sponsor bank, and it's fascinating that people would go, I'm going to move my money from SVB, a whatever 30 plus year institution, to a challenger bank. You know, now Evolve's the underwriter, so Evolve's going to have the FDIC coverage, but to see that kind of movement, but that's also a credit to how Mercury's created their culture and got their brand out there, because people knew to move to that purpose, right? And they knew they could get good financial tools. I think the challenge is not just, you know, do I have a way for them to open the account, but do I have tools where they can apply for a loan, they can open another account, they can move money the way they want to move money, they can, you know, Zelle or Venmo or do other things they need to do without creating all these obstacles. And I know when I say that, like I spent years at Q2, right, doing all the integrations. I know it's hard. I know if you're a smaller credit union or bank, you don't have these like fancy middlewares. You don't have these APIs where you can just drag and drop your data in different places. But there are starting to be more solutions. I mean, when we started Q2, there was nothing like you write your own integrations, right? You write to JExchange, you write to Fiserv, you do all that yourself. Nowadays, there's at least 3 or 4 different vendors who can create that middleware for you and connect to different cores. And so one of the things we're seeing, I don't know if you heard this term, but they call it side core. So now you can buy a side core from a core company, more modern one, and you can run it alongside your existing, legacy core. And then with that one, you can start to offer specialized ACA, specialized API, specialized banking services, whether you do that through a Chime or whether you decide to roll your own brand, right? You can be more flexible that way, right?
Yeah, no, I've seen that. There's a handful of those companies that have spun up and having varying different levels of success with that, because there's a lot of legacy baggage, a lot of legacy weight, and it goes it's diametrically opposed to one of the other big principles when I think about digital expectations from consumers today, and it's accessibility, right? And I look at accessibility in 2 different ways. So consumers today, if they're interacting with technology, if I'm on a 27-inch Mac, which what I'm looking at here, or if I'm on a smaller Mac, right? It doesn't really matter. It has to be completely mobile responsive. So if it's on an iPad, if it's on some sort of smart device, the baseline expectation for all of us is that I can hop from screen, from device. It doesn't matter. I can still interact with it. But the flip side of accessibility, and this is another thing that there's a lot of just legacy difficulty around, is user accessibility with people with varying different abilities, right? Mm-hmm. We built this in right from the ground 6 years ago when we started the company, and I'm talking about WCAG accessibility, right? So if somebody's got varying different levels of abilities, maybe they've got some color contrast, colorblind issues, maybe they may be blind in general, maybe they're deaf. Again, lots of different varying levels of abilities that some of the folks in our industry have completely bypassed, right? They're not thinking about coding and building content to be as accessible to the widest group possible. And when you look at globally, I think the latest number I saw was somewhere like 20% of the world's population has some sort of vision impairment. So I'm not talking about like, oh, that one person in your town that may not be able to utilize your website. I'm talking about tens of millions of people, right?
Sure.
That have trouble with color contrast, for example, and they just can't interact with it. So digital expectations, when I say accessibility, it's really twofold. It's to be as accessible to the widest audience possible with varying levels of abilities, but it's also making sure that everything that you're building is accessible, is mobile responsive, regardless of the size of the device.
Yeah, that's a great point. To segue a little bit, Eric, one of the things that, so there's a couple things at the top of mind from financial institutions this year. In fact, I'll tell you the 3 that we've heard the most. Growth, so top line growth, right? Especially now that, PPP deposits aren't flowing and they're looking for those new low cost deposits. Cybersecurity, which I want to come back to because I know you guys have some thoughts on that. And then, the compliance regulatory burden. I don't know if you know this, but I have to study it, right? The financial crime market went from 30 billion in 2019 to 50 billion just in 2021. I don't even have 22's numbers. That's 60% growth. And part of that is part of that's PPP and other fraud, but a lot of that is just regulatory burden. So regulators coming out with more and more ways to protect, right? Ultimately, but it creates more burden. And here's the issue. I don't know any financial institution out there that's sitting there going, man, we got so many employees. We're covered. We're good. What else can we do? Let's twiddle the thumbs here. What I'm seeing a lot more, especially in the BSA and the back office operations, is, hey, I know you wanted that extra headcount, but this year looks tight, so we're not going to hire them. So hopefully you can utilize what you're doing or find ways to do more with less, wear more hats. So for us, efficiencies is really important. It's almost as important in terms of value to the institution inside a 1-2 punch. Growth, of course, but also let's get efficiencies on the things you're doing today so you can open up capacity for that growth, right? So that you don't feel, a quick way I'll segue is we do a TSA analogy, right? So we are much like a Clear is to the TSA, where when you're standing in a line with 100 people and you're going, man, this is an inefficient process. I got to take off my shoes. Oh, how do I get to that terminal and walk through that lane, right? And that's what we do. And a lot of institutions haven't evolved their operations or their compliance in that way, for obvious reasons. Tools haven't been there. So I'm kind of curious in your world. I'm sure with and we'll jump to cybersecurity in a second because I definitely want to talk to you about that. But like in the efficiency world, what are you guys seeing? I mean, obviously chatbots and the kind of technology you're deploying, the virtual branch has got to create some tremendous efficiency options.
Yeah, it's just absolutely huge. So we talk about this every day. How do we address our clients' back office deficiencies, right? And that is headcount. So almost every single bank and credit union that we work with, they're having the same trouble that every business in America is, which is turnover, open positions, right? So there's a lot of things where there were folks doing certain things in the back office that it's either been skinny down or they've lost somebody there and they can't hire and they can't get that tribal knowledge up fast enough. So we spend a lot of time around how do we either remove the need for human hands to touch something, or do we automate something on the front end? Our Form Commander, which is our digital form solution, is a huge piece of this. And we've had some of our clients, they'll have our Form Commander solution live for a couple of weeks, and they're calling us saying, we have no idea how we were doing it prior to this. You've completely, just changed our lives, which is, I was like, wow, okay. Things were really, tight back there at that office. But some of our institutions have 6, 7 people, in the back office. And if we can eliminate the need for a member or a customer to physically fill something out, drive it over and take it to the financial institution, or they're faxing something in, or just the paper shuffle, and they can do it right from their phone, fill everything out, and it automatically go back into the back end. That's saving hours and it's just dumb work, right? I'm not calling the people, but there's no skill in that. You're just copying from one to the other and you're processing stuff, and it just doesn't make sense. And this is still something that is rampant today with banks and credit unions, right? Where they're asking people to drive in to fill out a form or to present an ID or a deposit or a signature. It's like we've solved all that stuff with Branch Commander. It's a holistic solution. They can do everything they need to right from their phone, and we don't ever have to have the burden of them coming in. So yeah, efficiencies is huge. Every new product or service that we are providing to our clients, we ask that question, right? Like, how much is this going to benefit the efficiencies for our financial institutions? And, we try to work out, how many hours a week would this save at scale, right? Depending on their size and how that goes. And lots of really exciting feedback from our clients that are utilizing those services, because it was a manual process before, which is crazy. It's great.
Yeah. That's what we're excited about. We have so many different workflows, and I literally had a client start yesterday, and he's like, I'm going to do these 10 things you never dreamed about, because they're my issues and I can just create them inside of RiskOut's workflows. And I love it, but I was going to say something, in terms of the compliance market, there's a lot of machine learning. That's the big like buzzword, right? And look, I love machine learning. I think it's going to change every industry we have for a lot of these mundane things. But it won't replace a compliance officer's keen sight or a loan, review underwriter. It will help them do their job better. But one of the challenges right now is, someone goes out and says, hey, I'm going to have this company says an SML solution. I'm going to install it. And then they turn around and they have 1,000 new alerts, where yesterday was 10 alerts. And they don't even know where those alerts came out of the black box. So it creates challenges. And again, I'm a big proponent for ML, but, institutions are sometimes left holding the bag, both, financially and on the operational burden that comes after that, without really understanding, is this a better process? Am I any safer for doing it? So I kind of segue that into, we're not big in cybersecurity, but we hear this concern a lot. It's one of the top 3 this year. Just as kind of like one of the last things we talk about here, what's your take on the cybersecurity market for financial institutions? What's that like right now?
It's like the wild, wild west, really. It's so nuts. You're talking about cyber crimes or just crimes and, financial crimes in general, and how it's jumped up. My chief information security officer, I meet with him every week, and we kind of talk about trends, things he's seeing, because he's in there, man. He's on the dark web. He's seeing all the stuff. He's looking at the things. And the amount of fraud and the amount of just attacks, even on a small financial institution on a daily basis, is mind-blowing, right? So we do a lot of external penetration, internal penetration. We do it's a full suite of cybersecurity services for our banks and credit unions. But the alarming thing is, because it's a newer term, cybersecurity has probably been something people really started talking about in the past 4 or 5 years. A lot of our financial institutions that aren't the big, household names, they haven't traditionally had a budget for these things, right? But that doesn't mean that the bad actors aren't going after them because they don't have a budget for it. So there's still very early days in our financial institutions understanding like, hey, you're going to need to have a line item for this, or you're not going to have any line items at all, right? Because these guys are good. I mean, the way that they're social engineering tellers and back office staff at financial institutions to give them the information that they want, it again, it's mind blowing. My cybersecurity team, you name a financial institution and they'll contact them, they'll get your information, right? Just by having conversations or sending emails and the things that they can do with text messages that make it look like it's coming from your CEO or it's coming from your boss, right?
Yeah.
So there's just so much education that absolutely has to happen in our industry to save the amount of confidence we have left in our industry from the consumers, right? We all kind of felt that gut punch a couple weeks ago with the SVB and Signature, and I do think there's another shoe to drop there. But let consumers start having their accounts wiped out en masse, or banks or credit unions that get wiped out through cyber attacks, and it's going to be a whole other issue that we're dealing with. So cybersecurity is huge. We've had our cybersecurity spun up now. It's been a couple of years, and the work that they're doing individually with our FIs that are utilizing those services, it's crazy. It's crazy the things that they find. It really is just.
It's so important. It's the same vein of all the things we're talking about. Most institutions, again, don't have, a massive marketing staff. They don't have a massive compliance staff. They don't have a big cybersecurity staff or even IT staff. And so unfortunately, these things are starting to break the isolation bubble that an institution is generally in. And we were talking about this earlier. I've got a Texas bank here, and he's like, man, I can only really get out. So maybe a drive 2 hours away to get to a conference. And so I'm not at Money 2020. I'm not at some of these places to learn, about the newest things. I'm not at the, black hat type of, thing. So even if I was, I wouldn't know the first thing to apply or do. And so I think it's really important to find good providers like yourself, like what we're doing in compliance. And look, this is a promise. I know you kind of have the same culture. It's why we hang out, but if you call me and you have a problem as a banker or credit union, like I'm happy to give you the value of my experience, right? No strings attached, right? If you end up liking Risk Out, great. If not, if you need cybersecurity, I'll hook you up with Eric or, people that I know in the space, because it's important that we talk and we share these things, because this is really a village. And you're absolutely, hammer on the nail head there in terms of like, as soon as a couple of institutions in this wake of SVB get, sort of ransomware locked out and accounts start getting drained, there's going to be a lot more bank runs. There's going to be a lot more concern about where people put their money, right? And, look, I love community banks and credit unions, but I will say that without having a very strong IT person, they are a bit at risk. One of my buddies, last little story here, he's they call them a mitigator or a cleanup guy. So he comes in kind of like when you get those flood crews that come in and clean up your water in your house. He does this for ransomware. So he comes in, they negotiate with the ransomware guys. They get the keys, they unlock everything, then they harden everything. And by the way, like 98% of the time, they do give the keys when you pay them, because they don't want to have reputational risk of not paying. But a lot of what he's seeing are smaller financial institutions and municipalities, especially in Mississippi, New Orleans. He can't even talk about them because these are literally police departments and city halls and key critical services that are getting locked out of their data, and a lot of them are not making the media, right? Yep. So it's an important thing. You should call Eric and talk to his guys. I'm sure you're not going to get a sales pitch. You're going to get a pure solutioning perspective of what you need and what you might think. But it's important if you're an institution listening to this.
That shows you how big of a thing this is, that there's a whole middle layer of companies that have spun up just to mediate between the bad guys and the victims, right? I mean, how crazy is that? That's how big this thing is. And it's billions and billions of dollars that is successfully being stolen. And I'll leave you on this. So much of the time, the weakest link is always the employees. And again, as we're going through turnover and new tellers starting and new people at the bank and the credit union, if they haven't had any kind of security training whatsoever, and I find this really true with our smaller credit unions, they get somebody on the phone and they just want to help, right? They get into people helping people mode. And by helping, they're really giving those keys, those proverbial keys, to the bad guy. So it's so big around education. So I think I think this is very, like I said, it's Wild West, early days, whatever you want to call it. Cybersecurity is going to be the biggest talking point when it comes to financial technology and maybe just everything in general. I would say in the next 5 to 10 years, it's going to suck out all the oxygen in the room compared to anything else that we're talking about now, because it's just going to be that big of a deal.
Yeah. Well, good, man. I think we covered a lot of good stuff. Talked about growth, talked about compliance, talked about digital, talked about cybersecurity. I think we should do this again and kind of refresh on some other topics out there, because you and I both have been through this for a couple of decades, and anything we could share to the audience would be great. Look, man, it's always great to catch up with you, and hopefully along with this, we'll post some links and some stuff for everybody to go learn more. And hey, if you're in the audience, in the comments here, send out some topics you want us to talk about. Eric and I, we'll probably have our beers on, and you'll have your great OmniCommander suit. I got to see that, and then we'll do another couch talk.
That sounds great. He's Justin. I'm Eric. Appreciate everyone's time.
See you guys.